The S&P 500 closed down 0.61% today with another day of market softness. We mentioned in last Friday's video this 60-50 level. That was our first target to the downside if the markets continued moving lower today. So we basically hit that on the close. And our next level after that, if we continue to see market weakness, is going to be the 6,000 level. That's going to be right in the middle of our lower dealer cluster zone. We also have several days here just prior to the Thanksgiving holiday here in the US of some contention as the market was pausing after this big ramp higher. So the 6,000 level seems like a natural spot for a next target if we see continued downside. However, further downside is definitely not guaranteed. We still have the largest gamma exposure concentration at the 6,100 strike, that despite the softness we saw the last couple of days, and this 6,200 level continues creeping higher, volume continuing to come in at that strike. I think a lot of market participants are making a year-end bet, a speculative bet, that we can see a rally into year end. So that's something to continue to keep your eye on there. If we just scroll down to our gamma exposure data graph, you can see we are still in positive total gamma, just barely above that 60-50 strike. And so because we are in positive gamma, technically from the S&P 500 perspective, this is a buy the dip environment still. You can see most of the GEX is on the positive side with just a little bit of negative GEX here creeping up above the 6,000 strike. But let's contrast that with something like the Qs. The Qs also having a negative day down 0.79%. And if we scroll down here to our gamma exposure data graph on the Qs, you can see we are actually in negative gamma exposure territory. Total gamma going negative 393 million. So a little bit of contention here in the market. The Qs negative, the S&P 500 still hanging on to positive GEX territory. And basically what that tells us is that the market is unsure at this level of where it wants to go. In a broader context, the S&P 500 wants to go higher from the options market positioning, and the Qs looks like a little further weakness potentially to the downside in terms of the Qs options market positioning. And so sometimes we have an unclear picture when we look at various indices and index ETFs, and that seems to be the case as of today.
Thanks, Anthony. Yeah, going along with the gamma data that you pointed out, I just wanted to look back and point out that last week we were given pretty good signals from gamma. We had 6,100 as a target for Friday. Of course, we hit like 60.99 and change, so it was very close. But we also, both in the newsletter and YouTube and in Discord, we were pointing out the divergences between VIX and VVIX that we have seen in the past. And we also noted that some of the more tactical, technical indicators were getting close to where we might see some downside. And so today, in fact, we saw a gap down in SPX and SPY that set us below the whole moving average. And so in my personal methodology, that's a sell signal. We're still in the context of this very sharply rising set of Keltner channels, and that's bullish. And, we've got SPX back to neutral. I wouldn't be surprised to see this decline continue this week, but we still have those higher targets. So, yeah, thanks. Just wanted to point out that the technicals seem to be kind of matching what we're seeing on the gamma front as well.
All right, now let's take a look at Bitcoin. Bitcoin trading just above the 96,000 level. We saw some softness today, along with the rest of the market down 3.43%. The 100,000 strike is still the largest gamma exposure concentration. And after trading above 100K for a couple of days there, we see gamma exposure growing now at the 105,000 strike. And if we just scroll up our chart, we can see actually we have gamma exposure continuing to grow at the 110,000 strike, which we mentioned here about a week ago. And the 115,000 strike is also starting to get some attention. You see volume here in the options market, not as high as what we would see in like an NVIDIA or Tesla, of course, much smaller volume, but you have to remember this is a $100,000 asset. So volume levels are going to be lower, but still significant when you look across the chain as we are displaying here on our dashboard. The risk is that we go all the way back down to the 90,000 90,000 strike, between 90,000 and 92,000. We did tag that level here a couple of days ago, but positioning in the options market for Bitcoin is still bullish. And so I think any further pullback looks like an interesting long point from a risk reward perspective. Risk being a break below the 90,000 strike and reward potential being upwards of the 110,000 strike. And this is probably in a 30 to 60 day time frame. So that's something we've been discussing and monitoring in our community Discord. By the way, I'll put a link down in the description below for you guys to check that out.
All right, let's take a look at SLV. We have SLV exposure in our educational portfolio, and it's done great for us as of today's big gap up. The candle does show that the price faded, as you can see, but let's take a quick look. We can see the whole moving average is here at 28.30. It's also coinciding with the middle Keltner channel. There's this big gap. I don't know if that's going to fill or not, but we still, going over here to the gamma picture, we have very positive gamma, and we can see that we did have volume today at 28, but we haven't quite reached this GEX cluster at 30. And we have lots of GEX there, so mostly higher strikes and higher targets for SLV.
Yeah, both SLV and GLD coming back to life today. Thanks for that, Sean. Next, I want to take a look at Tesla. Tesla opened up today above the big 400 strike. If you've been watching our videos last night, as well as last week and the week before, we've been highlighting this big GEX here at the 400 strike. Huge move from Thanksgiving until now. This is basically the second, let's call it the second election leg up. Huge move from the 320 level all the way to 400. We saw an immediate rejection this morning after opening and breaking through that 400 level. This is likely seeing selling pressure from dealers above the 400 strike. Classic gamma exposure behavior when you see price exceeding these large GEX levels like we have here at 400. Doesn't mean that it can't rally back to the 400 strike and above. We even saw we got a little bit of a rally here on the closing candle. So it is possible that we could see another attempt upwards to the 400 strike. And of course, the 420 strike is now starting to grow as well. So something to keep an eye on. If you haven't been in this move, it's probably too late now, at least on a near-term basis, from a risk reward perspective. And so of course you would want to get in, below the 350 level if you were going to be getting in this for a long play. But I do think it's interesting that over 300,000 contracts came in here at the 400 strike. So there's definitely still going to be a lot of interest at this 400 level in Tesla.
All right, my last one for the day is going to be Lockheed Martin, which you can see topped out in mid-October and basically has been in a downtrend since then. We are right at the bottom Keltner channel here. We tried to get above the whole moving average today, but failed. But I'd rather buy something when it's closer to the lower Keltner. And let's take a quick look at the gamma picture because this is interesting as well. So we do have negative gamma, but we're at the largest negative GEX cluster right here. And it's actually showing a positive trajectory. We made a low Friday. And furthermore, look at the GEX levels chart. We're in a dealer cluster zone here with volume at 530 and current price is 510. But to me, even though we have slightly negative gamma and it's been in a downtrend, it looks to me like there's more upside than downside here, and the risk reward looks pretty favorable.
All right, everyone. If you want access to our gamma exposure dashboard and our option flow analytics tools, head on over to geeksoffinance.com. You can sign up and become a member. You'll also get access to our community Discord. We've got a ton of great traders in there sharing insights and information and market analysis every single trading session. So you definitely don't want to miss that. I'll put a link in the description below for that as well for you guys to check out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.